Well, the New York Stock Exchange Deutsche Börse deal has been nixed. Is this good for competition? We got David Benoit joining us on the set now to tell us about this. It was nixed. The merger of this was nixed because it was going to be a monopoly for derivatives trading, right? Tell us what was the problem with that.
Yeah, essentially the EU
European Union.
Yes, European Union antitrust people or commissioner came out and called it a quasi-monopoly. Not quite full, but essentially in terms of derivatives, in terms of futures trading and options trading on exchanges, they would have had 93% of the market, it seemed like, which is a pretty big share.
Is there the trading exchanges, this might be a stupid question, but it seems like the only place where you would want a monopoly. Right?
Well, I think they were worried about kind of pricing and kind of what it would happen if you could only trade these things, through one company.
But haven't we had problems with liquidity and stuff like that with derivatives, so that it would be a better way to keep the market really healthy? No?
In terms of keep track. Well, no. There's still a lot that's done not on the exchanges, which is part of the problem.
And I think this is one of those things, is that when you try to regulate things like derivatives, is that you can very much drive away the liquidity from sort of where it's out in the open. A lot of people want to have their derivatives over the counter. So I think this is a sort of a moot point, and they're looking at, as usual, it's government and government regulation, looking exactly where they shouldn't be looking. I mean, I can't see that this will, destroy competition. I mean, if you look at the derivatives markets of the futures exchanges all around the world, I mean, the London Metal Exchange still dominates in metals trading, and there's no way that if it bought COMEX that it would be any less competition. It still dominates, right?
Yeah, well, if you look at it, the exchanges, when they were trying to fight this through, were saying that if you counted the over-the-counter not traded on exchanges, they'd only have about 15% of the derivatives market. So clearly the vast majority of derivatives being traded are not going to be traded on their exchanges, even if so.
So this is interesting to me that it's gotten in the way there. Do we need, David, to have more consolidation in this industry, because profit margins are relatively thin for a lot of the banks right now? I know that's a hard thing for a lot of people to swallow, because it's very fashionable to hate the banks and they've been getting bailouts and all that sort of stuff, but a lot of their profit margins on things like this are just wafer thin.
Well, some of the European banks actually did not want the deal to go through. They were applauding that it was rejected today because they are worried about prices and not necessarily getting better for them. Certainly, the exchanges were all anxious to get mergers. We saw a whole wave of them, and seemingly none of them are going to happen. But for banks, it doesn't look like.
But they're the customers. The banks are the customers of the exchanges, so that. I can see this. This is thrilling you, Julia, because you don't actually
deal. It's a super tech story. I can see that.
One of the things that I worry about whenever government gets involved is that they look at the wrong piece of the pie and tend to go wrong with it. What do you think? You've watched government regulation in action in a more general sense.
Look, I think it's really hard to take a blanket look at government regulation, but I mean.
But we'll try.
I would say that in my vantage point, which is really on the tech side, the European antitrust regulators have been the toughest on the tech companies, and often are far ahead of where the U.S. regulators are willing to go, sometimes for better, sometimes for worse.